So I think coming back to maybe an earlier question of what sort of markets do new traders first gravitate towards, I think the same question is, what sort of markets do people carry on trading? I mean, there's obviously anyone who likes to trade a market that is moving and is giving them those opportunities. Something like any of the data releases will always give you the opportunity of a market that has the potential to move. I think obviously the big risk going into the figures is it becomes very much, I don't believe anyone is out researching the analysts that are out there who are predicting what the market data release will be. So I think there's an element of taking a position into the figure always has an element of risk to it. But given that again that it's a 50-50 shot on whether the market does perceive the news as good or bad, it is as much about managing the position after it. But the one thing about trading over, during, after data releases, maybe particularly after data releases, is that there is market movement. It does give you an opportunity to make or lose money fairly quickly. I think you have to understand all the implications of that day. I think it's the sort of day that even people with years and years and years of experience that I've seen will avoid those days because they believe that they can make money without throwing in the complete randomness of a data release. The non-farm payroll, as you mentioned earlier, why should that move the German DAX market? In pure theory, it makes no real sense. So I know a lot of traders who will specifically take that Friday afternoon off because they believe they can make money in the other 4.5 days a week because they have good trading strategies. The randomness of that one day precludes them from trading there. Versus there are traders who live for the buzz and the excitement of that fast-moving pace of the market and believe that they can, the markets will tend to extend in directions because people will get sucked into a move. So there are opportunities in it, I can't deny that. It's just understanding the full implications of it and being ready to be quick with cutting losses, taking profits sometimes over those releases, I think is a slightly different skill to the skill required to make the money on the other 4.5 days of the week. Same sort of thing. Any real data releases, I think, gives you an opportunity. The funny thing about interest rate decisions is 9 times out of 10 they are very much as the market expected, and we're hanging on almost the specific words in a statement that comes out after those releases because we know that the rates are going to stay unchanged at 0.5%. But again, it is the fact that it is still a data release. If something happens unexpected, the market tends to react, possibly overreact, possibly underreact. That's part of the skill of it.